Coinbase shown their seriousness. They're not making this up. The alarm of tens of millions of dollars is certainly something to be concerned about, particularly when it affects Shiba Inu so greatly. However, this is just the very beginning. Next up comes something much more significant. You'll be astonished, I promise. What exactly am I talking about, though? Okay, let me clarify. Welcome to Dr. Crypto, your daily serving of Shiba. This is the spot for you if you're curious about anything related to Shiba. If you want to keep informed about all the latest news forecasts and stay ahead of the curve in the crypto industry, subscribe. To get more Shib news, be sure to click the like button. There are some very exciting developments in today's news. Consider the latest bombshell released by the massive cryptocurrency exchange Coinbase. They just revealed that they had donated a staggering $25 million to Fairshake, a super political action committee focused only on cryptocurrency. Coinbase is getting ready for a vigorous lobbying effort in anticipation of the next U.S. elections. As you can see, the cryptocurrency community is buzzing over these elections, and things aren't always bright and sunny. A tempest is approaching, especially when prominent figures like Joe Biden have disparaged cryptocurrencies. His latest veto has shocked the community and sparked calls for a ban on cryptocurrency. Brian Armstrong, the CEO of Coinbase, isn't holding back, however. He is yelling from the rooftops for cryptocurrency voters to take action. Politicians won't take us seriously until they receive the word that opposing crypto is a terrible idea. It's time to throw our support behind the crypto-friendly politicians and silence the doubters. For the cryptocurrency community, this goes beyond a mere political dispute. It has to do with maintaining our position in the digital sphere. Coinbase's $25 million investment, it is an indication that the action is going to heat up. So, everyone, fasten your seatbelts. This is going to be one crazy trip in the next months. However, this isn't what really excites me about today. We start out today with a really important finding. U.S. spot Bitcoin exchange-traded funds had net inflows for the 15th day in a row yesterday, with an astounding $105 million added. This is a really noteworthy streak. Indeed, we have previously seen considerably longer influx streaks, much longer. Those inflows ceased and became outflows when individuals were too exuberant. This change was made in April, as you may recall. Many believed that protracted stretches of inflows would not recur when they went negative, and yet here we are, with inflows into Bitcoin ETFs for 15 straight days. People are experiencing a mixture of cautious optimism and enthusiasm. While some believe that this pattern portends well for the cryptocurrency industry going forward, others are cautious since they are aware of how rapidly things can change. All in all, there's a buzz of optimism mixed with a hint of caution as people wait to see whether history will repeat itself or if this trend will continue. One little item might have a significant influence on Shiba Inu in the near future. Later, we'll talk about it. However, today also yielded another significant finding. Long-term Bitcoin holders have started to accumulate again, something they haven't done since December. Inflows into Bitcoin ETFs are unquestionably a good thing, but others would counter that there's nothing to get too excited about since these are merely new, conventional investors joining the cryptocurrency industry. This viewpoint seems reasonable to some people. Rather than demonstrating a genuine confidence in the revolutionary potential of cryptocurrencies, they see it as conventional investors just diversifying their portfolios. From this perspective, it's less a sincere support of the cryptocurrency movement and more a matter of financial strategy. However, it's impossible to ignore the enthusiasm now that early Bitcoin owners are coming back. They weren't actively collecting until December of last year. It's interesting to note that this coincided with preparations for the creation of a Bitcoin ETF. As the globe was rocked by this occurrence, these seasoned players busied themselves hoarding Bitcoin while it was still comparatively inexpensive. They realized that an ETF for Bitcoin would open doors to inflows worth billions of dollars. They were correct, too. Literally billions of dollars poured into Bitcoin after the adoption of the Bitcoin ETF, greatly influencing its price. Bitcoin surged to new all-time highs and exceeded $70,000 in only 2 months. It seems that these elderly whales were correct, and their calculated gamble paid off handsomely. And now, it seems that they have returned and are once again starting to accumulate. Some claim that this is due to the newly authorized Ethereum ETF, which is expected to start trading this month. Some speculate that it's because of the last 15 days of inflows into the Bitcoin ETF, which have caused Bitcoin to stir once again. Both arguments are reasonable. The approval of the Ethereum ETF may be drawing interest and capital, but the resurgence of interest in Bitcoin may indicate a wider market awakening. But one thing is certain, regardless of whatever viewpoint is accurate. The whales of crypto are bullish. Investors are closely monitoring their actions as they negotiate these exciting changes in the cryptocurrency field, as their return to accumulation implies a trust in the market's future path. What then is really happening behind the scenes? We must first examine on-chain data, however. The most recent Bitfinex Alpha report indicates that long-term Bitcoin holders have changed course, indicating a shift in the dynamics of the market. The selling pressure from these investors has subsided, according to Bitfinex experts, and this is a very significant development. Since February, the amount of Bitcoin that exchanges have on hand has drastically decreased, which has helped fuel the most recent price increase and may pave the way for future price increases. You may be wondering, however, why I'm bringing up Bitcoin. What connection does it have to Shiba Inu? As I've already shown in previous films, Shiba Inus are very sensitive to changes in the value of Bitcoin. But people are becoming more skeptical these days and are looking for more verifiable proof. Now let's get started. Shiba Inu's price gains often coincide with market trends, particularly those involving Bitcoin. Yet, Shiba Inu often experience large drops in value during market downturns as well. This has been a steady trend for the whole year, particularly noticeable in the latter part of April. For example, on May 1, Bitcoin dropped 15% from its peak of $66,000 on April 23 to a low of $56,000, which was the lowest price in 3 months. It's interesting to see that Shiba Inu followed suit, falling from a high on April 23 to a new low on May 1, as is a significant 23.5% decline in the same period as Bitcoin experienced comparable negative pressure. Shiba Inu and Bitcoin's price movements are synchronized, demonstrating their close link. Shiba Inu often get colds when Bitcoin sneezes, illustrating how intertwined these cryptocurrencies are in the market ecology. Over the last 30 days, Shiba Inu has shown a 79% association with Bitcoin, according market data from Into the Block. This is a significant positive association between the price fluctuations of Shiba Inu and Bitcoin. And although 79% may seem to be a mere figure presently, it really has considerable statistical significance. A correlation of 79% suggests that there is a substantial association between Shiba Inu and Bitcoin price swings. In other words, almost 79% of the time, Shiba Inu will most likely move in the same way that Bitcoin does, whether it rises or falls. This degree of connection demonstrates how tightly the market behavior of the two cryptocurrencies is entwined. And now, returning to the Bitcoin mania at the moment, there is something very intriguing. What I'm going to say could just grab your attention if the 15 straight days of inflows haven't already. The Bitcoin ETFs offered by Fidelity and BlackRock have contributed significantly to the total inflows into ETFs this year. In context, according to data from Intelligence, these Bitcoin ETFs have contributed to 26% and 56% of overall inflows for BlackRock and Fidelity, respectively, as noted by Bloomberg ETF analyst Eric Balchunas. According to Farsight Investor Statistics, since its inception over 5 months ago, BlackRock's A-Shares Bitcoin Trust and Fidelity's Wise Origin Bitcoin Fund have received $16.6 billion and $8.9 billion in inflows, respectively. Furthermore, it's absurd that Bitcoin ETFs make up 26% and 56% of the entire inflows into BlackRock's 429 ETF and Fidelity's 70 ETF lists, respectively. Considering the variety of investment choices that Bitcoin offers, it demonstrates the level of attention and investment that major institutions are placing in it. Therefore, rather than offering financial advice, it seems that we may be at the cusp of a possible bull run given the fresh excitement of longtime Bitcoin investors returning to the market and the expectation around the forthcoming US presidential election. However, what are your thoughts about that? Please leave a comment below. I look forward to reading your thoughts. The date is over now. Remember to give it a big thumbs up. To see our most recent material, share it and subscribe to the channel.